Investors and traders, welcome to the channel. Today we'll be taking a look at the key US stock indices as we usually do in this segment. This video is for educational purposes only and it is not a financial advice. Okay guys, so what we're going to do is we are going to start by actually taking a look at the bond market. In another video which I had done about a week and a half ago, we looked at bonds specifically. It's really important to look at what's happening in the bond market because it's much bigger than the stock market, and is much more interest rate sensitive than the stock market. And also the currencies, which is even bigger market, is very sensitive to interest rates. So guys, what we are looking at here is actually a chart of, this is the long bond chart. Long bond is the US Treasury T-bond futures chart. This is what we are looking at. So it is a 30-year bond maturity future chart that we are looking at. Here, what I want to draw your attention to is this resistance line right at the 132.17 level, and that has been a strong resistance which the market has not been able to take out on one, two, three, and the fourth occasion has tried several times. So the way the bond prices work is that when the price of a bond is moving higher, the yield is moving lower. So the yield is, or the price is inversely related to yield. Higher prices means lower yields, and higher yields mean lower prices. And what is the yield? It is an interest rate sensitivity. So what it means is it is going to indicate that, okay, uh, if you buy this bond, it's going to give you this much interest. That's how it's going to work. So important thing to understand is the price of a bond is inversely related to the yield. So again, same thing happening in the 10-year treasury note. Here, look, it's strong resistance here, and also in the long bond and the 10-year treasury note, we can see that the last rally which we had back in the June of 2022, in magnitude it's the similar rally. So does it mean that actually interest rates will begin to rise again? Because what we have seen over the last few days since 9th of March is a really sharp rally in the bond prices, meaning the yields have been getting decimated. But is it about to end? We have the FOMC meeting announcement coming tomorrow. So the interest rate decision coming out of the Federal Reserve is tomorrow, and I do not know what they're likely to do. But my personal opinion is that if they are going to raise the interest rate by 50 basis point or more, that could be pretty catastrophic for the market, given the stress conditions the market has been because of the investment certain banks like the Silicon Valley Bank going under, and just also by looking at the banking charts that we have been looking at, the banking index, and also the some of the even bigger banks, the pattern formations show a picture of lower prices. So perhaps there could be some further stress in there which we do not know about, and I do not know, having increasing the interest rate by a lot to fight the inflation. I don't know which direction the Fed is going to take, whether they're going to take whether they're going to think that, okay, fighting inflation is priority and it's a bigger danger, and the stress in the financial markets could be addressed, or is under control. So we will find out. Personal opinion is that if it's gonna be a 25 basis interest rate hike, it might be perceived as positive by the market, and it could also be taken as that perhaps, okay, given the situation, that might be the last one, and Fed could be done for quite some time in their rate hiking cycle, and might in fact begin to lower the interest rates moving forward, and that could actually mean risky assets could rally. Okay, but we'll find out that tomorrow. Now let's get back to the um, patterns that we are watching in the major stock indices. So this is the daily chart of the S&P 500 E-mini future. Here, if you remember, we were watching this ABCD pattern highlighted in the purple line, and it was right at also at the 61.8% Fibonacci retracement at 38.28. Price went down to 38.38, right at the ABCD level, and that has turned out to be a pretty good support level, and the price has been rallying since. What we are looking or watching is this level of 4065 highlighted here in brown. That is the next really key level to watch for especially for tomorrow's session. Could it be a double top here? If the price is able to convincingly take this level out, especially on 2 consecutive daily basis, then we think that okay, price is gonna go and challenge the highs around the 4200 level, and even there is a possibility based on the price action that we'll see that if this resistance level is also taken out. If you remember, we had this bigger ABCD pattern taking us to 4500 roughly. That might be back in play, so we'll be watching this space really, really carefully. Now let's take a look at the Russell 2000. This is the index which represents the E-mini Russell 2000 for small cap stocks, and small cap stocks are also very interest rate sensitive because their balance sheets seem to be smaller than the bigger companies. So here again, what we were watching for was this 71 1720 level as a possible good support, and that's why we had support and question mark written there. I'm going to remove the question mark because it has held for these many days, so it is a good support level. And we were then waiting for, or we were watching for this 1806 level, which was the 38.8% Fibonacci retracement of this swing right here. And that's what the market has done, is gone right into it. And in fact it has done it one times, two times, so it's not precisely the drawn from the exact, yeah, it's designed, drawn from this low. And in fact if I draw it from here, then what we can see is that the price is closed pretty much right at this level. So what we are watching for is just like the S&P 500, that the key level for us right here is this 1856. In fact, it's a little bit lower. uh, it is 1852 level, which is a 61.8% retracement. And also from the bigger swing, let's do it. uh, okay. So yeah, so the for the from the bigger swing it is 1833. So we'll be watching between 1833 to 1852 as a possible kind of a stronger resistance to come in. And I'm gonna just highlight this zone as the zone to watch. And if the price is able to really take out this level, then that's going to be really good. And then we'll begin to look at a bigger ABCD formation in this index as well, just like the possibility of 4500 being back on the ES. We'll have to wait and see how it's going to pan out. Now let's take a look at the NQs. So now the NQs are really, really interesting, because you can see that this index, it was the weakest index in 2022 because of the interest rate hikes. Growth stocks being in this index meant that higher interest rates were going to hurt them, because a lot of tech companies are not making money because they're growth. So they need more cash, they're burning cash. But the fact is really that there are really certain 5 6 really big companies that have been running the show. Anyway, looking at the technicals, this chart looks much stronger compared to the other two indices which we have seen, the S&P 500 ES mini contract chart and the Russell 2000 mini contract chart. So it's already right here in that zone we were watching, drawn in this brown lines. And looks like a strong day could actually take us to the level which we had been watching, that is 13,275. That might actually become a reality quite soon. The way it looks is pretty strong, the chart formation is pretty good. While we are here, just let's quickly take a look at the QQQs. A lot of people trade the triple Qs. So again, a similar kind of formation. I'll just do a really quick retracement level, and let's see what we get here. There we go. So it looks like, yeah, 315 quite easily. It looks like it can get there. Just an expansion of this swing on the upper side. What we are looking for is, there we go, 320, and then the double top here. So we'll have to wait and see. Let's finally take a look at the Dow Jones through the eyes of the E-mini future. So this index at one time was pretty strong. It was these, acting really strong compared to the other major indices that we just took a look at. And now this one seems to be the weakest one, but it has held about the 50% of this entire move, and it's moving back into the range. We do have, kind of a trend line resistance here, but if there's going to be strength in other indices, then there is going to be a pretty good chance it's just going to, go and perhaps challenge these highs again in short term at least. Roughly around 33,400 level. Apple is also included in this index, and Apple's stock has been pretty strong while we are here. Let's take a look at Apple. So guys, for a deeper discussion into this chart, I will ask you to watch the video which we did yesterday, in that we had a look at the stocks, the key or the major tech stocks that we have been following for quite some time. And here, look guys, this is a nice breakout out of this trading range. So it looks like Apple could rally to 164, which is going to be good for the Dow Jones index, and also the NASDAQ, which looks pretty strong. So guys, this is what we are watching. Apologies, the video is getting a little bit longer, so I'll just cut it short here. If you do like our analysis and how we look at the using pattern recognition and key Fibonacci retracement levels, where the market is likely to go next, then please do subscribe to the channel. And if you liked the video, then please do hit the like button. That way I know that it's just something to tell me that people find value from an educational perspective in the videos, and just gives me an encouragement to keep on making more videos for you guys for educational purposes. So thank you very much for watching the video. Good luck and good trading.